Can you tell us a little bit more about how you apply factor investing to global real estate?
Sure. Yeah, I think so. Global real estate is a bit interesting. It's still, for many investors and advisors that serve them, it's a tiny percentage of investors' portfolios. Maybe on average you see 2, 3, 4, 5% allocations to this asset class, when meanwhile real estate around the world is still probably the greatest value out there, the trillions of dollars of real estate privately and publicly. REITs are a funny thing in that, it's this strange asset class where we've got a public and private market operating for almost identical properties at the same time, which makes it very different than traditional equities. So there are some things that are unique about it, but I would just say that on the high level, everything we've all said I would agree with, and we're applying that in our REIT strategy and in our growth strategies. For REITs in particular, I think something to reference I mentioned earlier, leverage. So the size premium as it relates to security size in REITs, we apply that in our REIT strategy. So on average, we have smaller names than our peers in benchmark. And the size premium is vibrant in the REIT space. And similarly, the momentum premium is also vibrant in the REIT space. As a matter of fact, the momentum premium in REITs is actually even bigger than it is across almost all sectors. So size, momentum, and then of course value. Value is a little bit different with REITs because you can't really just accept the book value of REITs. There's this net asset value that has a lot of subjectivity to it and needs to be refreshed and updated more frequently than what we pull off financial statements. So we have a certain unique way of thinking about the net asset value, and then again, of course, that price in the numerator. Then you take all of those things and you think about leverage. So if you think about risk and marginal contributions and correlations, when we dial up the risk by having a greater amount of exposure to things like momentum and size, but we dial down the risk by reducing leverage. When we put those things together, the unit has better risk-adjusted returns or Sharpe ratios than if we had not done that. So it's about taking the right risks and how we combine them, and that's really what we're doing in our global REIT strategy, amongst other things.